What's good, everybody, and welcome to today's new YouTube video, where it is one you've been anticipating for a while now. This is my London session model and how I frame myself specifically around daily expansions during London session. So the premises and basics of this model are on your screen right here. It involves the New York midnight opening price, and then how we are utilizing this I will get into. A Judas swing during London session, and then our entry model in the same session. So we are anticipating a Judas swing from New York midnight open, and then we have an entry model. So the thought behind this is New York midnight open acts as like a benchmark for overbought or oversold, which you might familiarize with indicators, but this is our version of an indicator almost. So if we are below New York midnight open, by technicality we can call that oversold, and if we are above New York midnight open, by technicality we can call that overbought. So let's establish one thing first, and that is daily bias. Okay, so if you take a look here, has price been respecting down close candles for further upside, or has price been respecting up close candles for further downside in the long term? Okay, in the long term you can see we have, if I draw this out for you, the key swings up here, down, up, and now we're retracing. Okay, this is bullish. Okay, this is bullish order flow. Remember what I said, are down close candles being supported for further upside? In this scenario, yes, they are. And this is exactly where I want to show you an example of this London session model. So if we take out this order block over here, you can see, yes, we cut through these candles because all of this here is not clean enough. That's time distortion. And then we have a bullish order block here because we came up, created a fair value gap, moved away, and now we cut through the candles, and we have this in line with also this 3 down close candles here. Okay, so establishing daily bias, we've been bullish, we're retracing into what is a deep discount between that swing. You can see price wicked from the 79% level into a daily order block, right? So we've been bullish, and if we take a look, here's a key here as well. Day of the week, Monday ranged, Tuesday ranged, Wednesday traded down but also ranged, and then we made a low, or what some people will call a doji candle, into an order block. Okay, so what day did we make this on? A Thursday. Now, anticipating and bringing in weekly profiles, you can anticipate that, okay, this wasn't a clean move down. It's not like we had a move like this where it went up like this, momentum. We had a bit of lagging around, especially Tuesday, lagging around. Wednesday dropped, and then Thursday dropped, but into a high time frame PD array. Therefore, I would anticipate consolidation, Thursday reversal. Okay, that's what I outlined for my Discord as the potential weekly profile I was looking at. So with that in mind, we've traded lower or consolidated as well inside here into a higher time frame PD array. On Thursday, we can anticipate a reversal. So that is what I went into the markets thinking. Just a quick one before we get started here. If you guys are looking to get funded, I'd highly recommend Funding Engineer. I've traded with them many times before, and I found them to be the most trustworthy company to work with. They have 4 leading industry challenges here as we speak, and if you do want to support me, please do click the link in my bio and my description to sign up so I can continue giving away to you guys. You will also be entered into a bi-weekly giveaway when you sign up through that link. So that being said, we'll head back to the video. And now for the actual model itself, the knit and grit, if you will. Come down into Thursday, right? And remember, what is the first thing I told you all to know? New York midnight open. So we take our vertical line and mark out New York midnight open. Remember, overbought and oversold. If we are overbought, we want to be selling above, and if we are oversold, we want to be buying below. And as you can see, when London session opens up, which is 2 a.m. to 5 a.m., I just mark down here, 2 a.m. to 5 a.m., this can be our London session, okay? So London session opens up around here. You can see we've already dropped down below New York midnight open price, trades lower. And then this level here, this horizontal line, is that daily order block, remember, we wanted to see reaction from. Now, we simply zoom into the price action down here during London session. Remember, 2 till 5, we're still inside London session when we're trading inside here. And what do we look for? A drop below New York midnight open, if bullish, and then a drop into a higher time frame PD array. And now we're looking for our entry model. Now you might all recognize this one. We have a swing high, price trades lower, dipping into the daily order book. Consolidate, lag around a bit, and then look at that momentum in that candle. The speed, and then we wick above this high here. Now this, to me, gives us our shift in market structure. We have a high, a low, and then price breaks the previous high put in with momentum, right? Look how quickly it does it. And then what do we look for in the 2022 model? Of course, we look for a fair value gap. And as you can see inside there, this 3 candle formation gives us our fair value gap. Now you could take a long position as we trade back into it with our stop loss below the swing low down here, target these highs up here, and as you can see, that would have got smashed in just before New York session, okay? So that is the basics of the London session model, and that is how I navigate myself around London. You can really catch some large swings with this model. As you can see here, if you would have held on to that, obviously, and aimed for this external range liquidity up here, that would have been a 1 to 7. But I don't like to go for massive trades, so I would have taken the 1 to 3, and obviously ran out of my take profit here. This is the power of the London session model, and I want to emphasize that you really can catch really nice swings on this. When anticipating expansion, like we are on the daily candle, if we get a dip below New York midnight open price, sometimes I will just buy that just because of how bullish I am on the expansion, okay? And if you've got your entry model during the London session, I'd recommend you not to move your stop. So don't move your stop loss to break even, because oftentimes it will utilize that PD array again before moving higher. And you can see when your drawing liquidity is correct and you're, correctly anticipating expansion, you can really hold on to trades here. We went into this breaker, and now it looks like we want these equal highs up here. Now, moving on to the second example, I really want to emphasize that this can work on any market, okay? So if we look at this second example up here, how do we define our range? Remember, the first thing we want to do is find our drawn liquidity. So the first thing we need to do is define the range. Price retraces and then runs above this high, taking buy stops. And then we move lower, sweep this sell side liquidity with this lower down here. So I take this range high because this is the one that took out buy side liquidity, and then this range low because this took out sell side liquidity. So before this expansion actually happened, which obviously in hindsight now we can see, you would be anticipating a retracement back into the premium of this range, because we like to go short in premium, of course. Now, with that in mind, going into the Thursday, mark out New York midnight, and you can see it's the exact same day as the last example. This happens so much on every single market, okay? So you can really capitalize on this. New York midnight open, and remember, I'm just going to show you the little scalp inside here, which offers like however many pips, okay? This little scalp in here offers 95 points on the Nasdaq, and then you can see we sweep the low and move higher, giving us a huge expansion. But my focus is down here, equal highs, retracement, and obviously you've got the range here into a discount. Now, dropping down into our 5-minute chart, which is the best chart for this entry model. Remember, when we are bullish, drop below New York Midnight Open. It's the exact same thing here. Mark up New York Midnight Open. You can even draw a horizontal line just to visualize it. You can see we dip below into a discount of the larger swing. So from here to here, why this one? Because it took out sell side. Why this one? Because it took out buy side up here. Okay. This swing point to this swing point, this is a discount. That's our Judas swing. Okay. The second part of the model that gives us it there. And if we zoom into this bit of price action, I can see my entry model within here. Some of you may not be able to see it quite yet, but I see an up close candle, price runs, and then prints a big down close candle. Now, why this down close candle? Because it has the lowest close of the bodies. Okay, this one and not this one. If you take the wick out in time, as soon as we break above this candle on a closing basis, so in this scenario, as soon as we close above the candle like we did here, if it's with speed and momentum, this down close candle should now be used as buying. That is our bullish order block because it's got the lowest close, not this one. Price wicks into it, creates a swing low, and if you took a buy from there, target the equal highs, you'd be in really nice profit. Okay, and if you missed that, for example, you can see inside here, remember this is a market maker buy model. You can see inside here we have mitigation on one side, so that's up close candles which were used for selling. Okay, so if you look here, you can see this bearish order block here below New York Midnight Open was used for selling down into our discount of that swing I showed you earlier. Order block, and then we print higher. We close up, or we wick and close above these candles. Now, if we extend this out in time, if I get rid of that, we extend this out in time. Now we want this previous selling to be used as new buying, and that is exactly what we get here. See, it's an institutional order flow entry drill as well inside this fair value gap. Stop loss below there, and you could target a simple 1 to 2, and you would easily hit that just above these highs. Once you have equal highs, you can anticipate a deeper run above them, especially if price is moving as dynamic as it is here. Okay, so that brings us to the end of this video and us covering the London session model. Now, just with these two examples in the same day, you can see just how powerful this can be. And if you apply it right and learn the ins and outs, especially if New York Midnight Open, you can really capitalize on some strong moves. The key is being able to wait for these days where them strong moves will appear. Okay, so with that being said, if you did enjoy the video, please do drop a like and drop a comment. If you made it this far into the video, please do drop a fire emoji in the comments just to let me know you're supporting. Click my links in the description, and I will catch you in the next video. Thank you as always for watching.